Morning. I'm going to run you through my slide deck, and I will be making some forward-looking statements. So here's the slides. Take some time to read it. It's on our website if you wish. So why invest in Rambler? So first of all, I guess six key points I'd like to make, and I'm going to attempt to cover them off as we go through the presentation. Again, why own Rambler? I mean, location. We consider our location to be superb, located in Canada, Newfoundland, Labrador. We got a higher grade copper deposit in an upward moving copper market. We're expanding our production, narrowing in on 1250, which I'll bring you through. It's just 1250 tons per day. Also have an opportunity to go to 2,000 tons a day. We have a long life of mine, 20 years, around 16 million pounds of copper. Our C1 costs are improving as we're getting our production up. And lastly, we do have an exploration program in play, and there's some very encouraging results coming out of that. From a management team perspective, we have a tremendous talent at Rambler, and I guess that was really solidified by the investment of CE2 Mining Fund back in June of 2016. They came in, validated the plan we had, and no doubt the team stayed intact. So again, validation was certainly brought forward by the financing. We also have a very strong board of directors, chaired by our chairman, Mr. Brad Mills, a mining entrepreneur with some great successes in his career, no doubt. From a strong copper fundamentals, I guess what I should point out first of all is that we are a sort of a copper or gold producer. We do make a copper con with a byproduct mainly containing gold and silver. We like what we're seeing in the copper space. At 42% uplift in copper over the last 12 months. You're seeing analyst consensus start to narrow in on that $3 a pound copper. For us ourselves, we do at the board and sort of investment level, I get a lot of feedback on the copper market. We like what we're seeing, and sort of we're narrowing in on just around that just above the $3 a pound range for 2018. So no doubt a great time to be expanding and narrowing in on our 1250 target just around the corner in an upward moving copper market. A little bit on the share structure. We are duly listed on the AIM exchange as well as the venture. We have our market cap, 60 million pounds, about $100 million Canadian, 549 million shares outstanding, no debt, about $2 million US cash in the bank, and we've always had and continue to have a very strong institutional shareholder support. Some of those shareholders have been with us a long time. So I want to get into the operation now. We are again located in Newfoundland, Labrador, a tremendous place to do business, 100% ownership of the property. And just to set it up for you, it's an underground mine. Again, copper gold. We truck everything to surface from the Ming Mine, run it 40 kilometers down over the highway, down to Nugget. From there, copper con is produced and trucked up to Goodyear's Cove, and from there it goes to market, predominantly in Europe. A couple of pictures there. That's the mill assets that we have on site, as well as one of our Atlas Copco 282 jumbos working in the underground environment. So that's the operation in a nutshell. Here's a snapshot of the mine itself. It's a VMS deposit. The stringer stockward system fed the massive sulfide zone. That footwall zone, if I can get this pointer to work for me, this is the footwall zone that we're now. Historically, the mine was mined between 1972 and 1982. And the old folk mined right down here and got what they thought was structure out, jumped over onto the south zone and continued mining. Mine flooded in 1982, and those guys had used the old shaft. They stripped out the hoist and electrics, and the mine flooded. We went back in, drilled the property off, and in 2011 we started production again, predominantly mining from the massive sulfide zone. And I alluded to a financing in June of 2016. On the back of that financing, we started to develop and put heavy development into setting up the footwall zone. And right now our plan is at 1,250 tons per day to blend lower footwall zone ores with the massive sulfide ore, targeting 1,250 tons per day with a life of mine of about 20 years. And in a reserve right now we have 8.6 million tons, just shy of 1.8% copper and a half gram ton of gold. So we're narrowing in, production profile is increasing, and I'll talk about some of the finances and sort of the KPIs that this thing will throw off in a slide or two. So just quickly on the expansion itself. Again, we're nearing completion. The development over the last 14 months has looked to optimize the mine and get the development set up so that ultimately that we can start blending in that footwall zone ore. We're getting real close I think by the back end of October we'll be very close to bringing on one of our large blocks in the footwall zone, which will be able to sustain that 1,250 ton production on a daily continuous basis. So we're getting very close. It's getting exciting at the operation. From a cost perspective, if you look at this slide, you see that our C1 cost there was down around 170, 175, and as we started the development, just as we anticipated, our C1 cost shot up as we were driving development in low grade or even waste development, drove a C1 cost. We just weren't getting the pounds of metal out of the back of the plant because of the low grade ore that we were going through. As we got into Q1 and Q2, our C1 cost started to come down in line with getting access to higher grade stopes and getting that development into the footwall zone, allowing us to increase our throughput through the mill. So we're tracking well, and ultimately what we want to do on this plan is get our C1 cost down around 170 a pound copper US. Here's a KPI that I just alluded to. So, if you look at the middle of that graph at 279 copper price, the project at 1250 throws off around 5 million free cash, about $13 million in EBITDA, and it moves upwards on the scale and likewise downwards when the copper price falls back. Again, that's at 1,250 tons per day, and what we're seeing from our financial results, we knew 17 was going to be a heavy cash burn year as we set ourselves up for the future and drive development into the footwall zone. But we are seeing our revenue start to increase as we slowly drive our throughput through the mill up as we get access into that footwall zone. You'll see here our C1 cost, as alluded to, has come down Q1 over Q2. And I should point out, because I'm not sure if I mentioned it already, if you look at the constant copper con grade there, 26-28%, we got a real clean product, never ever paid any penalties. And it's it's a sought after product which we benefit from when we sell a product on to the offtake. A little bit on the guidance for the year, we're narrowing in around 11 to 13 million pounds of copper in this fiscal year, about 3,900 to 4,700 ounces of gold. So nice gold byproduct, predominantly coming from the massive sulfide zone. There we go. So before I move on to the opportunities and talk a little bit about exploration, this is a snapshot of what we have at 1250. So a decent little operation, throwing off the cash I just talked about, and you'll see here that we predominantly feed lower footwall zone, or we blend it with massive sulfide ores. And this slide here shows you that, that the massive sulfides are going to end in 10 years. Well, the reality of it is we have tremendous exploration potential, and I'm going to bring you through that in a second, just to demonstrate that what we're likely to see here is a continued feed through the mill of footwall zone blended with massive sulfides. All the zones are open at depth, and we've gotten some very nice results from our drilling program. So that's how it looks in the snapshot. Again, 16 million pounds of copper on an annual basis. So the future. So I want to talk a little bit about what we're looking at and what we're engineering in the background, as well as talk about exploration. So from a future growth opportunities perspective, I guess, what we're looking to do, and as a part of the investment by CE2 Money Fund back in June of last year, they really liked what they saw in the PFS, but they really liked the opportunities that we had talked about going bigger and scaling the operation up. At 2,000 tons per day, this operation is capable of throwing off about 25 to 30 million pounds of copper. So you're certainly starting to scale the project forward. We have engineering studies underway right now. We're targeting completion of those by June of next year and putting it all into a definitive or bankable feasibility. And as a part of that, we look at material handling. We look at one of those material handling opportunities would be reactivating that old historical shaft that I said that was pulled out before the mine flooded back in 1982. So we're fairly excited about this. I mean, the economics really start to take off when you push this operation to 2,000 tons per day. And the last thing I'll say about the 2,000 ton per day scenario is the footwall zone is a bulky ore body, tenfold compared to what we were mining historically in the massive sulfide. So that can produce at increasing rates from the underground. And that's why we're so keen on driving our throughput further. So exploration, we've had some great success this year in exploration, and again on the back of the financing that we did with CE2, the change in board of directors, we took a real focus on exploration because this thing is really underexplored. All zones are open at depth. And if you look at this slide, the old guys historically mined down that green-gray shaded area, and you'll see I got it circled there open for exploration. Well, as a part of our reserves and our mine planning, we need to come from the 1807 zone and cross into the south zone. As a part of that, and we were fairly comfortable that we were going to hit, because we had done a little bit of drilling earlier in the earlier days, but as we started to encroach across to the south zone, we found mineralization on the bottom of that Ming North zone. Drove out an exploration drift and poked some holes in there, and we got some very nice results. You'll see here in the bottom of the slide. I won't read through them all, but we got 21 meters of 3.1% copper, and about 1 gram a ton of gold. So that's some very nice intercepts. And the beauty about this right here is it's not going to change our mine plan in terms of how many tons we're going to lift from the underground, but it really provides more opportunity for easy access to massive sulfides. And as I said earlier, just more reserve, more tons to lengthen out the amount of years that we're able to blend using massive sulfide ore. So some tremendous high-grade stuff we're finding down plunge in the massive sulfide. In addition to that drill program, and heading in, I guess, into the bankable feasibility work that we want to do at 2,000 tons per day, I guess if I just back up for a second, at 2,000 tons per day, without adding additional resources, we could shorten the life of mine. So what we wanted to do, this thing from the drilling we've done since 2005 on the property, we're seeing increases in grade and increases in thicknesses at depth. So in order to firm up and I guess and provide us with more confidence as we drove our way through that bankable feasibility study, how big is the footwall zone? So what we've done is we put a drill on surface, we put RIMM 1725A drill hole down to a total depth of 1,771 meters, and that first hole has been very successful. You'll see some of the results there. 40 meters at 1.42% copper. Including 6 meter intercept and 7.5 meter intercept, grading between 2.25% and 2.5% copper. But what we also struck as a consequence of that drill hole is the corner of the Ming South zone, and that has two intercepts. Two lenses, and the bottom lens there, as you can tell on the screen here, had about 6 meters of 2.85% copper and 3 grams per ton of gold. That's a very nice intercept. So what this is showing, the drill hole continues. You'll just see quickly here, you'll see that we've now got a second daughter hole coming off that main mother hole. The idea is to put 6 pierce points down, and we stepped out with that first hole 300 meters off the bottom of the known reserve, and the footwall zone continues. So again, they'll all feed back in and provide us additional confidence and reassurances that the footwall zone continues as we work through this bankable feasibility study. So very encouraging first hole. The drilling continues, and we'll continue to report back to the market. From a, I guess, a health, safety, and environment perspective, just quickly, but I'd be remiss if I didn't point out the big success that we've had here and a tremendous safety record we have at site. I mean, those stats there are phenomenal. I mean, they're the world-class statistics. We have a great operation, proud of our team at site, and certainly proud of being awarded the John T. Ryan Award last year in Canada for the safest underground operation in the country. So tremendous safety record. In wrapping up and looking forward, I guess you could sort of tell, we're coming off phase 1. Phase 2, we're getting real close to nailing down now. And again, we talked about the economics that that'll give us. Exploration and delineation drilling will continue. The mine is underexplored. We have tremendous opportunity to add value here and increase our valuation through the addition of additional resources and reserves. 43-101 technical report, we're going to update our 1250 scenario later on in the year just to demonstrate to the market that we've made it. The 1250 scenario is in check. And I guess lastly, in the longer term, I guess we call it long term, June of next year, but we're looking to ultimately put that bankable feasibility study out to demonstrate that this Ming Mine is capable of producing 2,000 tons per day. So that's it, Tony. I think I got about a minute left. So
we've got time for a question if anyone's got one. Okay, Neil, can you just use the mic? Yeah.
What's the? You're kind of putting words in their mouth, so to speak. What's the plan for the fund that owns 72% of this? Are they going to take this private ultimately? Does it make more sense than being listed?
Yeah, I mean it is a big shareholdership, 72%. I think what you're going to see is that fund and that money tends to be sort of longer term, support the growth of the company, 5 to 7 year time money. So you think about where we're to with the profile and the plan. As we go through the 2,000 tons and demonstrate and create further valuation, that should create some opportunities down the road for the fund to start to come off and ultimately open up the door for others to come in as we grow the company forward. So the short answer to your question is 5, 7, 10 year money. So they're here to support this growth cycle and the upward moving and the expansion.